Happy New Year, and first of all, thank you guys so much for a great 2024, and let's make 2025 even better by paying attention to some technicals, maybe looking at some things we did wrong, and then paying attention to what we did right and really capitalizing on our strengths and trying to minimize those weaknesses. Maybe it is something as simple as, hey, I need to manage my risk a little bit better, and that's something that we're going to talk about even more in 2025 as we look like we are getting to a point in 2025 where we could see some kind of corrective move or some kind of crash. So let's get into it. You're probably hearing a bunch of people talk about the head and shoulders. I'm sure everyone's talking about this. This would be the way that you could see an early correction into 2025. But if we correct right now, I'm not 100% certain that we actually would get some kind of a stock market crash. I think it might just be that and be some sort of correction. So the best part about today is we have updated the monthly expected moves. So the monthly expected moves for January coming in at 611.03 to the upside for the SPY and 561.13 to the downside for the SPY. So this is our 68% zone for January, right? The first month of 2025, we noticed that how did that zone treat us recently for the SPY? Well, we actually noticed some things tapping out to the upside and seeing some downside. That's more going to be relevant with the Qs. We actually used the downside monthly expected move for the SPY to catch some sort of bounce, and we landed almost directly on it. So very, very cool. Those are very important, and it's important to understand this is not a 100% zone. This is a 68% zone. So what should we be paying attention to if we want to go to new all-time highs? Well, if this daily is able to confirm up, we can notice that that would take us into an uptrend, and it could be as simple as that. If the daily or a 2-hour is able to complete that divergence down here that we're going to talk about, we could see that upward move right away in January, and then we might want to be a little bit cautious if we start to see that divergence show its head. Remember, we weren't too scared of the big drop here because we didn't have the best reversal signals for the SPY, and if you're going to get some kind of topping process, some kind of top that leads to actually a crash, well, this is part of the process, and part of that process would mean we are very likely to go make a new all-time high. So something we want to pay attention to is this overall forming? Yes, it is. We notice on the 2-hour, it is plain and simple for the 2-hour for the SPY. We just noticed that. Hey, look at the divergence down here. It looks fantastic on the MACD. It looks fantastic on the RSI. But here's the thing. It's still forming. It has not confirmed yet. So we need to be bullish once this actually confirms. And then really, if you want to see some kind of squeeze, if you get some big up days that take you outside of these daily expected moves and you're able to get back above this high right here, as you have kind of confirmed that as a lower high, you'd want to take that out to continue that positivity. So that's what I'd be paying attention to for the upside, but this has not confirmed yet. So is it close to confirming? Do we have some signals that suggest that it could confirm as soon as tomorrow? Yes, you do. Yeah, for the daily expected moves for tomorrow, we see those in red on your chart here, and ooh, we're in a buy zone. This is our 68% zone for tomorrow. We just use options data to calculate all these moves, and we notice that 591.29 to the upside is right there for us for the SPY, and we have 580.87 to the downside. Now, this is going to be key going into tomorrow. Can we actually see something crazy and get above these areas? That would be a good start. Really don't want to see us start to lose these kinds of levels. So notice where that downside move is. It is right on the previous wick. So if we're going to drop down, that's as low as we want to go. We do not want to take this out because that starts to get you more worried that we are going to get that corrective move early on in January. But the signals right now are saying a double bottom has confirmed. That has confirmed on this bar right here, and we're able to hold that 9 on the 30 just barely. If we can start to whip this up, if we can get some great price action to the upside, you might be on the verge of some kind of squeeze here. We are mainly going over the indices today, but we do notice that the Qs have a new monthly expected move, right? 540.57 to the upside, just taking us just barely above this high. And we have 481.89 to the downside. So a decent amount, right? This is a bigger range than last month. So we got to be paying attention to direction here because you could see a first move up or a first move down and then a big reaction in the other direction, right? A move up and then a big reaction in the other direction. So something we'll be paying attention to is that topside move, right? If we're making some basing out structure down here, then we mainly want to say, hey, what's the trend? It's positive. If that curls up, positivity can be there. This would mean in the month of January, you would want to back off of the bull side towards 540.57, just so you are aware. Now, as we go into a 2-hour, does that have a good likelihood to go up? Well, what we notice right now is the Qs are not looking as good as the SPY, okay? This is not looking as good as the SPY. This is where we should be open to possibly even a lower high from the Qs, weirdly enough. Even with the more volatility, we want to pay attention to the divergence. We also want to pay attention to the lower high, okay? And that's just because you don't have it on both indicators at the same time, right? We have a 2-hour divergence here, a little bit more flat than the SPY, and then we have the divergence not even there on the MACD. So this would mean that this is like a soft, I would say like a soft or a grade 2 divergence because it's not on both indicators, which would just mean we have to be open to the lower high a little bit more so for the Qs. But if they're able to curl up the daily, the most likely thing to do is test the high, go make a new one. So you're really just bullish over these type of levels, right? If we can wipe out this high and stabilize, which it seems we are, okay, does that 2-hour have a good shot to turn up? Well, the Qs have not confirmed it, but you do have the divergence there on the RSI in one of our buy zones at the weekly expected move. All of this says the percentages are this way, okay? The percentages are this way. But we will need to see that bullishness step in, because if we start to lose key levels, if we start to lose these levels in here, this breakdown area, you are very likely to go into our other buy zone down a little bit lower. So with good signals like this, hey, we should see that 2-hour pop up. That 2-hour pops up. Hey, we could probably take out this high and end up seeing some kind of squeeze into the mid-January time. So that's what we're paying attention to for the Qs, and the daily expected moves are up here on your chart, 517.34, 505.12 to the downside, which would take you again outside of the weekly, which means by Friday, we are very likely to end right here, a little less likely to end down here. And this kind of works for us when we look at the other indices, because those have vomited for a very long time, guys. They really haven't gotten a good snapback reaction. They're building in this area, which is the breakout, right? We're just testing breakouts for these indices, which is pretty cool. This is something that we lean towards. We really like when we retest those breakouts. If we can form a base there, we can end up in the other direction. Now, the key thing that is different about IWM is we really want to pay attention. If this curls up, this is still very likely to be a lower high, okay? This is very likely to be a lower high with the positioning of the MACD. We can see how that would take a lot of work for the daily, but if we can keep going, awesome. But we are going to pay attention to any forms of weakness that we see on shorter time frames in case IWM kind of gives this up a little bit earlier. So that's something we'll be paying attention to for IWM. Now, if you want the monthly expected moves for IWM, DIA, all the other stocks that we're covering, Apple, Microsoft, Tesla, Meta, even SoFi, DJT, AMC, GME, those are all going to be on Patreon, which is down the link in the description. It is a great time to try out Patreon at the end of a month, beginning of a month, because you get the most value up front, and then you can really utilize those. Give it a try for a month. It only costs you $7. It's a cup of coffee can get you those ranges, and you can see how you like them for profit taking and trade setups. They're fantastic. And if you have questions, you can come to the live video and ask me how I like to utilize those ranges, and that's very, very cool. So what we're looking at here is, what's the structure look like in this? Is IWM likely to curl up this daily? Well, in order to do that, we need to go into a 2-hour chart. We need to notice, hey, that never curled down. So we might be rejecting here, which means if I'm rejecting, one, I gotta be aware that this is moving sideways. And if this breaks, we're gonna end up lower and probably at a weekly expected move. So be open to that. But if we're actually seeing this try to form as a higher low, it's kind of doing what it needs to do right now, which is the 30-minute is trying to go positive, right? The 30-minute right here is really, really close to making that positive move. We were able to catch ourselves at this low. We can see that if we wanted to head lower to create the 2-hour divergence and the 30-minute divergence for IWM, that would be very simple. We would just do this really quickly, right? We would see that 30-minute divergence pop up, and then we would go, okay, now we're back to the bull side. We want to be reacting in markets like this. This is kind of bear market practice, which is very, very fun for me. I like to see it. And we easily notice, left head, possible right shoulder. But we also notice in this microstructure in here, our line of 222.60. We've really liked this line in the past. And left head, right shoulder. So if you can go positive here, I think you have a sizable move, maybe to get up towards a weekly expected move just from this little head and shoulders here, because you've built liquidity for so long. If you take out this high, you can see some good price action to the upside, but we are aware of the risk of IWM dropping down on a 2-hour and a 30-minute to go into our next buy zone. So just be open to that, be open to managing risk. If anyone is in IWM, then something you got to consider is managing the trade, something we teach extensively in the course, which is on the sale, by the way. DIA, we're kind of in a similar boat. We're really trying to hold these levels. We're trying to, as of right now, carve this out. And it looks like we have confirmed that, hey, this is going to be a slightly higher low for the 30-minute. So that's very, very cool. But we notice that this looks a little bit like it's making some sort of shape that could fall down. So if this curls down, we need to be open to downside. So let's pull up a 2-hour just to look at this. I don't have the correct ranges up right now. We might get those up tomorrow for the live show. But I want you to see this divergence for DIA. That's the main thing you got to see here. DIA, huge divergence here. DIA as well, the weekly expected move. I actually should update that so you can see where this is at, because those are very important to point out what are the percentages for the week. So the downside move here, 423.17. If I could type that correctly, 423.17. Okay, so the reason I'm putting that up there is because I want you to see the reactions from that weekly expected move, right? This is very, very good. And if DIA actually sees the 2-hour cross here, it means this is a strong base, and all of this move through the trend here, right? This little trend right here is just kind of a fake out, right? We got the retest and it might fake out and end up turning to the upside. So this is fantastic to see from a 2-hour chart. Now, why is that great to see? Well, because the daily, right? The daily is here, and I'm going to make sure to update this top side range just so we have it. 436.83. Okay, so this would mean that by the end of the week, we could end up towards 436.83. The good part about that would be, one, you're going to break through this level, this little box in here that is turned into a resistance zone, right? If we have a buy zone and you break through it, you can use it as a resistance zone, but notice we're caught between a buy and a sell zone right now. So what we want to see is, can the DIA, can the Dow Jones break through? And that's what we were talking about with the SPY. They really have to break through key levels to be bullish again. But I want you to pay attention to the left head and right shoulder we did not make, because sometimes these things happen where you go down, you test the breakdown area, you end up seeing a good reaction, but it ends up just being the right shoulder that you should have made in the past. So I'll be paying attention to lower highs, right? Because of the positioning of the MACD, because we kind of skipped that bounce in here, it really leads me to believe that we could see a lower high from the Dow Jones, we could see a lower high from IWM, while the SPY and the Qs actually go make new all-time highs. So that is something I will be paying attention to in 2025. Now, is there risk that 2025 right away, like we won't see any upside right away? Well, there is a signal to be paying attention to right in here. Okay, the dollar did confirm the monthly signal for December, and that's a big deal, okay, guys, because these red lines coincide with this type of trigger right here. So as of right now, I can sit here and I can go like this. I can actually take a line and I can put it there. I can go like that, because that is the signal we're looking for. So this is, I'm marking it off because this is exactly what we've seen in the past. So we want to see if that weakness is going to show its face in January. Now, it doesn't mean that we can't see positivity in January, right? If the dollar is scaling up very dramatically, it usually means a flight to cash and out of assets. Now, what we want to pay attention to is the fact that the daily, though, does still have this divergence. You are potentially making a 4-hour divergence. We're going to go into that a little bit during the live show tomorrow. So this means that if we actually get the dollar to back off on the daily scale, we actually can see that curl back up later on. And this little price down right here would actually maybe cause some positivity. It could show that people are going into markets, and then right when they actually hit all-time highs and we create reversal signals, this dollar starts to turn back around, because the daily charts, okay, momentum is great. But if you really think about it, inside of a daily chart, or inside of a monthly chart, there's 30 days, if you want to put it that way. I know it's not trading sessions, but say there's 30 days of price action in a full month, right? So which one is going to be stronger? Most likely the monthly. So we would need the daily to potentially back off, give us some kind of run in the market, and then people are caught off guard in January when this thing flips back up. So we'll pay attention to when that flips back up into positive territory, if it's able to. If it's not, then we could see the dollar completely collapse, and this could be a false signal. So that's just something I would be aware of. Let's go check on volatility real quick. I just want you to see the monthly, how it's creeping up towards positive, and that's a big deal. Okay, the closer you get to positive, the closer you get to these big spikes. Now, we've already experienced those big spikes, so I think the fear has been here for a while, and we're going to have to see some kind of run here in 2025 to get people a little bit more euphoric for some upside plays. So something that I'll be watching over the next few weeks is daily charts, right? I will be watching daily charts and going into shorter time frames in a moment, but I think we have some good inclination that this wants to come down to 1212 in 2025. We'll see if that is proven by crossing back down on this MACD into negative territory for the VIX. That will hint that there is some more positivity left in this market. Now we go into, say, a 30-minute chart. I did just want to pull this up real quick because, yeah, we saw some volatility continue, but did we see the same reaction from VIX, right? Did we see this take off like we were talking about, right? If you go look a couple days ago at our video, we said, is volatility going to curl up and take off right now, or is it going to do something lackluster, something that fakes people out? And looks like lackluster at the moment. Now, this hasn't crossed, so it's going to be important to pay attention to this early on as far as, January 2nd, tomorrow. Really want to be paying attention to this early on. The 2-hour chart is something that I would watch even closer. If that 2-hour crosses down like this, you are very likely at this point to see this trend broken and actually end up down towards 1212. That is where we will pay attention to those little reversal signals in here, and maybe even that gives us a daily divergence. So we can really pay attention to these markets. We can see how the move from volatility wasn't suggesting that the selling should continue, but it can. So we're aware of the risk. We're waiting for some key things to happen here. We're still waiting for the 2-hour signal. And that's pretty much the main takeaway is at the end of the day, what's the ultimate signal? We can pay attention to 30 minutes. 30 minutes can trick a lot of the time. That's fine. We saw a divergence over here. We got a pop. Now we have a divergence over here. Are we going to get a pop? Well, the 2-hour confirming up would be the bigger pop that we're looking for, right? This one, we were just looking for a bounce. We ran into a weekly expected move and fall. Awesome. We were always talking about how we're going to make that stronger base on a 2-hour because we know this is behaving like a bear market right now. So if this is going to cross up, that's the ultimate signal that gets you past these levels, right? A little 30-minute curl up that fails does not get you past these levels. The 2-hour getting a strong bar here, confirming up on your MACD, going into positive territory, testing this level, that's how you break through, and that's how you see some kind of squeeze, is you got to get above, I would say, a level of closing above 600. So thank you guys so much for watching today. I hope you had a great New Year's. I hope you have a great 2025, and I will be live tomorrow morning to look at stocks with you. So thank you so much for watching. Make sure to get these monthlies on your chart if you need to go back and pause the video to get those. Thank you so much. Have a great year. All right. Good luck trading tomorrow. I'll see you in the morning. Peace out.